Hello and welcome to the Tax Dialogues here on Breakfast Daily on Citi TV and the Citi Breakfast Show on 97.3 Citi FM. My name is Ni Latte. Many thanks for joining us. This is a program that we are organizing in partnership with Oxfam. The idea generally or basically is that we want to educate the public on how ordinary citizens can have a better understanding of the whole tax regime in the country to ensure that they honor their tax obligation in a much more friendly manner. Also, find ways and means government can enhance its revenue mobilization in the country. And you know that the issue of tax in Ghana is one topical one that a lot of people always want to have just because of how critical it is to national development. And so that is why we are organizing this particular one in partnership with Oxfam. My name is Nila Tilate, and thank you again for joining us. Today, our focus will be on e-commerce or digital taxation. So to help us with today's discussion, I have with me here two industry players. To my immediate left is Madam Emilia Assam. She is an Assistant Commissioner at the Ghana Revenue Authority. Madam Assam, thank you for joining us. Next to her is Benjamin Arthur. He is the Associate Director, Tax Compliance Service at accounting and auditing firm EY. Mr. Arthur, grateful to have you here.
Thank you.
Welcome. Maybe let me start with you, Madam Assam. When you talk about the digital economy or the digital taxation, what exactly are we referring to?
All right, thank you very much. You realize that countries are changing, economies are changing, and what is new with us now is the fact that we do a lot of business online, not physically. We sell, we provide services. Said that if it was physical, GRA or any person who wants to engage them can walk to them, identify them, ask them to pay the right taxes or account for whatever they are expected to do. However, in our age, there are a lot of services that are rendered online, such as you can decide to engage someone to provide you some web services, like setting up your site for you. You can ask for maintenance online. You can buy books online. You can watch videos, engage in learning, all online. Then individual businesses who have their existence in Ghana, for example, it could be a bank, it could be an entity. You might engage someone to give you a software. With transactions like that, it's difficult to identify. And when we go on the net, when we go on some of these apps, you realize that as you scroll through, as you watch videos, you see snippets of adverts coming up. You see people trading. All these are engagements, which for us is business. And if someone is engaged in business, the person is expected to pay the right tax. So GRA as an entity, the laws that are in existence, gives us the right to identify these taxpayers who do business online or provide services. So we have two main categories. We have the e-service. That is where people are providing services for business and individuals. And we also have e-commerce, where people do business with each other. E-commerce can also come in two main forms, where people do business with individuals, and we also have business to business. All these have tax effects at various stages. So we have put in place the mechanisms to ensure that anyone who is registrable or must be registered is registered. When we look at business done domestically or people who are providing these businesses domestically, they usually have physical presence in the sense that they may have a shop or they have some physical presence that you can identify them to. So it is not so challenging, but the biggest challenge is when you are dealing with someone who is non-resident. The person is out of the country, but he provides services or engages in business with people here. And sometimes when it is done, it is very difficult to actually identify them, track them, and make them account for the right tax. So what we have done is that with the promulgation of the Act 1082, or the Value Added Tax Amendment Act, we have come out with modalities to ensure that these persons who do businesses in Ghana or do it through their agents, if the agent is working on behalf of an entity outside, then the agent is expected to register and account for tax the same way any business in Ghana should be registered. But if the person does not have any presence in Ghana, then the person is expected to register. When you go online, you go to the GRA website, there are modalities for such persons to register. You register with your business documents, with your ID card, which is notarized, so that we will believe that the person we are dealing with. And if you don't go through this registration process, there are sanctions that are in the law, said that we will engage other entities like the Bank of Ghana, NITA, such that if you have to have any transfers or your website can even be blocked so that you can't continue doing business in Ghana.
So that's actually a comprehensive opening remarks from Madam Assam as far as digital taxation is concerned. Let me find out from Benjamin. Benjamin, just refresh our minds. How did we get here? Of all the tax handles that we have in the country, at what point did Ghana realize that, well, it's time for us to look at digital taxation?
Okay. So as Madam Asiam said, businesses and the world in general has evolved, right? Digitalization has been with us for some time, but you note that ever since COVID-19 and the need for us to work remotely and find new ways of working, digital means of working have become very, very common, right? Generally, when it comes to taxation, the focus has been on physical presence as well as source, right? So these have been the traditional means of imposing tax. Once you have a presence in the country and you tick some boxes, you become tax resident and are required to fulfill the compliance obligations. Again, when you have income that is derived from sources within Ghana, it also triggers tax obligations in Ghana or tax liabilities within Ghana. Now, with the advent of digitalization, you note that people are working on the cloud. People are working on the internet. You cannot identify the specific locations or trace the individuals behind these things, right? So there's a need for us to also evolve as the world is evolving with our tax compliance measures. Ghana, as Mrs. Siama said, has introduced since 2022 indirect taxation on e-commerce services, right? So that is one step that we have taken to try and rope these online transaction or electronic transactions into the tax net. What remains, however, to be seen is what we are going to do where direct taxation is involved. Some countries, such as Nigeria, have started efforts in that they've passed domestic laws that are applying income tax compliance measures to persons who are operating within the digital space. Globally, there are other multinational bodies that are looking to promulgate laws. One of them is the OECD, right, the Organization of Economic Cooperation and Development. This organization is rolling out action points that multinationals and various countries can deploy to effectively tax the digital space.
Well, we'll be coming to those issues later on, but is there a justification at all for digital taxation? Because, well, the argument is that we want to promote a cashless society. Technology is the new norm. I mean, we want to help industries thrive using technology and all that. Why then the decision to be taxing some of these things?
Sure. So from my earlier submission, we have two main types of tax, right? We have indirect taxes and then direct taxes, right? Indirect taxes, the rationale is that when you are consuming services, you need to pay for the taxes on those services, right? Currently, what we have there is the VAT on e-commerce, right? So if you have a physical presence in the country and you provide a service, you are supposed to be taxed. The only, let's say, nuance where these electronic transactions are concerned is that they do not have physical presence, right? And that gives them an unfair advantage as compared to persons who are physically present. And that's why the playing field needs to be leveled so that persons who are operating in the clouds are also brought into the tax net.
Well, Madam Azam, for the uninitiated, When we say digital taxation, specifically speak to me, which areas, critical areas of the digital economy are we looking at?
All right. When we talk about digital taxation, just as I said earlier on, you realize that we are talking about first e-service. That's where people are providing services online. So we can talk about web hosting, web installation, virtual teaching. We can talk about games and betting online. We can talk about provision of maintenance by entities who are not resident, do it online, not physical. My emphasis here is that not physical. The moment it's physical, it takes a different nature, and we can't describe it as e-commerce. Then we talk about businesses. You realize that many people trade online, you know, and they do it mostly through the main, what do you call it, service providers, those who have the service. So they do the trading through them using their platform. These are the things we are talking about. So that we go on Google, we talk about Facebook, all these people provide platforms which are used by people to do businesses.
So between when the law was promulgated, as you mentioned, and now as we speak, from your perspective or from an authority's perspective, that's GRA, how has compliance level been?
All right. Let me draw attention to the fact that when we talk about e-commerce, it doesn't start in last year. It has always been in our acts. The VAT Act 584, which was amended, it was changed to the 807, all had provisions on e-commerce, but the scope has been expanded. And when we look at what we've done so far, we've been able to have our presence online to allow persons who are not registered or hitherto didn't even know how to register with us. You can register wherever you are. The only thing you need to do is you go online to our website, then you complete your registration form, then you attach your notarized ID card and business documents, and we'll get you registered. And once you are registered, we'll notify you as such. And you are expected to also file your returns monthly as it is done. I want to draw your attention to the fact that as we speak now, our emphasis is on the indirect taxes. Just as my colleague said, you know, indirect taxes are taxes that are paid by persons who consume services. So for example, if I engage someone to provide some maintenance on equipment online for me, or an app or something, I'm expected to ensure that that person who is providing that service is registered. Or if it's not registered, then I will act as an agent to ensure that taxes that must be paid, I ensure that it is paid, and I report on it to GRA. So far, so good. I can tell you that the big ones in the e-commerce industry, Facebook, Google, Microsoft, all of them are registered with us. Because our operations have said that if you don't register, we will have a way of getting to you. So looking at e-commerce with people who are not resident, we've registered over 100, and more are in place where we are going through the process. And when it comes to the local environment, you realize that some people are also engaged in these services. We have a team in place who is tracking transactions online to ensure, but just as I said, some of these are registered already as businesses. So they are using the internet as an opening for them to expand their scope. This year, it is projected that when it comes to e-commerce, that is e-service and e-commerce, we project that we will be able to collect as much as 2.7 billion. And you realize when you talk about e-commerce, we're talking about gaming and betting. You know, not too long ago, we also amended our law and changed the tax payable. Individuals who earned income from betting are supposed to pay 10% of whatever they earn, and entities who are engaged in betting business are supposed to pay 20%.
So Panthers were not happy with that directive.
Exactly, but everyone must pay a little bit of what is expected to keep the country moving. We need more taxes, and there's always the talk that we need to expand the net. In expanding the net, it's not only those in the informal sector. We are also concerned about other people who are earning incomes in the economy who are not paying any tax. Thank you.
All right, I don't know if Benjamin has something to add on to, this whole e-tax conversation, taking off from where Madam Assam left off.
Yeah, so for e-tax, I think it's a function of the times you are in, right? It's a global phenomenon. You asked why are we also taxing these persons? Ghana is not the only country, right? Countries the world over are promulgating laws to rope into the tax net these persons, and it's all within the conversation of expanding the tax net. I think we've already discussed the elusive nature of persons operating within this space, and it's important that we formulate laws around it so that we can bring them into the tax net.
But are there some loopholes that we've identified with, the collection of digital tax in Ghana? And if so, how should we fine-tune some of these loopholes with watertight policies like just you mentioned, laws, policies, and what have you?
Okay. So the indirect tax, it's going well. I think that's a new initiative for the non-residents, especially, who hitherto were not traceable, right? But tax, I think it will be important for us to also look at it. As I mentioned earlier, there are other countries that are already putting in place laws or entering agreements that will look into the taxation of this particular group of businesses for the purposes of income tax.
When we look at the direct taxes, that is income tax. From the income that you earn, you're expected to pay your tax. But what I said earlier, you realize that the focus is on the indirect tax. That is what someone who is consuming a particular service is expected to pay. So now, with the entity who is making income, and when we look at these big companies, they are making a lot of money from Ghana. How do we get them to pay income tax? There's always the perception that the income is earned here, their presence is not here, but we are talking about place and source of income to determine whether it is taxable. That income is earned globally. So wherever you are, we should be able to do that. There are lots of perceptions out there. When you look at OECD's briefings on how taxation to be done digitally, they emphasize that we should look at the income that is earned by an entity, and based on percentages that is agreed on below a particular threshold, then you cannot tax it. And we also have those who go in for a digital service tax, where they say that, all right, as a country or an entity, let's decide on what we should consider as tax, percentage of tax that someone who is earning income through e-commerce must pay. All these discussions are on the table. The Finance Ministry and the Ghana Revenue Authority have set up a committee, and they are looking at how best to also tackle indirect taxes with regards to entities who are not resident in Ghana but doing business through the digital environment.
Well, let's come home. When I say home, I mean something that we are all used to. That's e-levy, which is one of the main digital tax that we have here in the country. How have you fared with the implementation of e-levy? A lot of people were not happy when it was first introduced. The rate was reduced. A lot of mobile telcos are actually recording increase in mobile money transaction, but we are struggling to meet our target with e-levy. What exactly is happening?
I think you said it all. When it all started, the perception out there was that government is doing everything to take every penny out of our pockets. There were a lot of misconceptions about the taxes. However, after the few months of implementation, we realized that all persons who had either stopped doing e-levy transactions started using the service. So far, so good. I can't speak to the figures now, but revenue is increasing, and I'm hoping that as we go for, by the end of the year, we'll come up with figures that we'll all be happy to know about. E-levy is doing well, and it is in to stay, and we hope that we'll all contribute a bit so that the economy will not have to rely on other countries or other entities to keep our country moving.
Should we expect a reduction in the rate?
Oh, I don't think so, because the budget has been read and nothing like that was said. So, and there's no change. Oh no, I wouldn't. I don't have the capacity to see that, to say that. But I don't think we should expect any reduction. E-levy is going to be as we know it. Thank you.
Have you been more effective and efficient with e-levy collection or taxation? And I'm asking you, Benjamin.
Sure. So if you look at the projections, right, so from the 2024 budget reading, 2023, the projected revenue from e-levy is sitting at 1.1 billion cedis. For 2024, government is looking at doing something in the region of 2 billion. Right. So government is expecting there to be a doubling of the revenues from the e-levy. Looking at the projected rate at which mobile money transactions have been growing, this may be a challenge. Right. So in as much as digitalization is the way, electronic payments are the way, and people are actually still increasing the use of electronic transactions in terms of the mobile money method of payment, the projections that we are looking at would be significantly improved if we look at a revision of the rate, because the rate of growth of e-levy transactions or mobile money transactions is not the same as the way we are projecting it. So it will be important possibly to look at a reduction of the rate. I think in as much as people are still using it because it's the creature of convenience, more people will be encouraged to use these means of payment if the rate should be reduced slightly.
Let me stay with you. You've
Sure.
mentioned OECD.
Okay.
Another thing on the table is digital service tax, find our own local way of, going about issues like this. Are we better off going with the OECD, or we should find a local solution to our own problem?
Okay, so with the OECD, so the OECD is a group of some 38 countries who are largely the highest earners globally, right? So these are rich countries. And the conversation that went on in the formulation of the OECD's inclusive framework did not take into consideration most of the issues that were raised by African countries, right? So it turns out that most of the policies that were proposed are not favorable to developing countries such as Ghana, right? Case in point is the minimum rate that is being proposed of 15%. Averagely, in fact, globally, the average rate of tax is 25%, right? So if you are going to give off a chance of taxing revenue at 25%, only to tax at 15%, then you realize that you are losing, right? So this rate is more favorable to countries or tax havens that have very low rates and may end up getting additional taxes because of this higher minimum tax rate, right? Beyond that, the process was not as transparent as we would like in terms of African countries, right? So African countries, first of all, were not really involved, and then our inputs did not appear to have been taken on board. There's also the issue of the dispute resolution mechanism, to the extent that if there are issues arising with a multinational based on the application of the rules, you are supposed to go to international arbitration, right? You realize that this puts a block on a country's ability to exercise its sovereignty in terms of applying the laws within the land to resolve the issues. So there are also two other issues I would like to add. First of all, being the fact that when it comes to any residual taxes, right, the country that gets the taxing rights is the country where the entity is based, right? So in as much as these multinationals may be making significant revenues within Ghana or other African countries, the country that gets the taxing rights will be the home country of these multinationals, and you realize that we lose out in that regard. Yeah. So this are part of the reasons why it would not be advisable to go with the OECD model as it is, right? Just 2 days ago, the UN has announced that they are also coming up with modifications to international conventions on taxation, right? The UN in the past or historically have had more favorable policies where taxation is concerned. Favorable in the terms of the fact that it considers the requirements of developing countries, right? So it remains to see what the UN will propose. But in the interim, it is advisable that Ghana charts its own course in developing its own digital service taxation rules.
So Benjamin says that, well, it is not good for us to go with the OECD inclusive framework because of its current nature. He feels as if, well, there will be more flexibility, we can have more control, the approach can be more tailored if we find, you know, our own way of handling the issue through digital service tax, if that's the point. Well, is it something that you share in if you want to have a quick bite on this?
And digitalization will not end anytime soon. That will be the norm, you know, and it will be easier with time and more revenue will be raked in. Thank you.
Benjamin, your final words?
Yeah, concerning digital tax, as Madam Esiam has said, it is the future, right? It remains for us to look at all the avenues available to us, learn from the mistakes of other countries, right? And then structure our own laws so that we can effectively maximize the tax revenues from this space.
Thank you very much, ladies and gentlemen. This has been the Tax Dialogue here on Breakfast Daily on Citi TV and the Citi Breakfast Show on 97.3 Citi FM. The conversation today was centered on digital taxation. I had with me here Madam Emilia Assam. She is an assistant commissioner at the Ghana Revenue Authority, as well as Benjamin Arthur. He is associate director of tax compliance services at accounting and auditing firm EY. My name is Ni Latte. Many thanks indeed for your company.